And we entered the Trump cycle last time with tariffs and, oh my God, this and that. Rates were going up and the dollar was going up. Trump came into office and immediately said the dollar's too high. The dollar came lower. China were also near recession. They had to stimulate. They spent the rest of the next 2 years stimulating. And that's what drove the crypto cycle in 2017. So we've got an incredible similar setup to 2017, which you were around for that one. It was bullish as hell.
Back in 2017, Trump's tariff war triggered a global chain reaction. Bitcoin thrived in the chaos and pushed past every expectation. With similar conditions building now, the next breakout could move even faster. That's the message from Raoul Pal, Real Vision CEO and former Goldman Sachs executive. The last major crypto bull run began under Donald Trump's presidency. In 2017, the economy entered what became known as the Trump cycle, starting with tariffs, rising interest rates, and a surging dollar. Shortly after taking office, Trump declared the dollar was too strong. The administration's pivot helped drive the dollar lower, just as China, teetering on the edge of recession, was forced to stimulate its economy. For the next 2 years, China injected massive liquidity into global markets. That flood of stimulus, combined with a weaker dollar, fueled one of the most powerful crypto cycles in history. Today, the setup feels almost identical. Liquidity is starting to flood back in. The same warning signs and opportunities from 2017 are flashing again. People who lived through that cycle, like Raoul Pal and other market veterans, can see it clearly, and most of them are more bullish now than they were back then. Make sure to stick around until the end of the video, as Raoul Pal reveals what most people are missing about this cycle and why it could change everything. Also guys, only a small percentage of my viewers subscribe. If you enjoy staying updated with finance content, consider subscribing or liking the video. It's free, and you can always change your mind. Now here's Raoul Pal with his insight on the signals most people are missing right now.
Liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit. Then it went up another 10x into the end of the year. People can't understand this. It's like, you know, if Bitcoin went up 10x from here, I mean, we're $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then. And what happens is you sell out positions, the market corrects, and because liquidity is still the driver, everybody gets forced back into their positions, and that creates this violent end of year move. That's possible. I'm not saying it's definite, but you know, I think of improbabilities, and that's where my head's at. We're now in the part of the cycle which tends to be what I call the banana singularity, when things start to get really crazy. We've seen that with the Trump coin and whatever. What we're still missing is the massive liquidity injections that should come into the market from the central banks and governments. We've got the US will be draining what's known as the Treasury General Account, which is their checking account. That will increase liquidity significantly in the US over the next few months until they negotiate the debt ceiling. I think there is a broader deal that's going to get done with the dollar and China, and I think the US is been using the strong dollar as a negotiation point with China. China can't stimulate its broken economy right now until the dollar weakens, because if not, if they stimulate, they'll break the peg against the dollar, which they do not want. They don't want capital flight. So you need the dollar to come down, and then the Chinese can stimulate and help the world economy recover. The US knows this, and it's a tool for everybody. If Chinese economy starts to recover, they'll buy US treasuries. So we're at the really interesting point in the cycle where all the debt has to get refinanced, all the games have to get played, the dollar needs to weaken, rates will come down, and everyone will refinance their debts by adding liquidity. What does that all mean? All of the macro stuff, all it means is number go up. Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. So it all lies ahead this year. What's interesting is the discussion around when the cycle ends. So a lot of people have PTSD because of the last cycle. And that finished early. It peaked in April, went down 50%, up, made a new high, and then kind of just failed, right? That was driven by the fact that the business cycle, the ISM survey, peaked in March 2021. Why? Because we had that snap crash from COVID and then snap back up, and the business cycle peaked, as did liquidity. So the cycle peaked. So as it went down again, tried to come up again, but kind of failed because there was no follow through because the business cycle had peaked. This time around, the business cycle is actually still below 50, which is the slow growth zone, not recession zone, but slow growth. And all the forward-looking indicators say the US economy and the global economy is about to get a lot stronger. And so we're nowhere near peaking. In fact, we're only just bottoming. So the chances are that we might even go through all the way till Q1 2026. So I think we've got a longer cycle. I think it will almost certainly outperform the last cycle and looks more like 2017 to me, which, guess what, was a Trump cycle. And we entered the Trump cycle last time with tariffs and, oh my God, this and that. Rates were going up and the dollar was going up. Trump came into office and immediately said the dollar's too high. The dollar came lower. China were also near recession. They had to stimulate. They spent the rest of the next 2 years stimulating. And that's what drove the crypto cycle in 2017. So we've got an incredible similar setup to 2017, which you were around for that one. It was bullish as hell.
The feeling in the crypto market right now is a lot like it was back in 2017, but bigger. Back then, Bitcoin kicked things off with a massive rally, and a few months later, altcoins went crazy. Prices shot up everywhere. People who had never even heard of Ethereum were suddenly talking about buying the dip. It was wild, and it happened faster than anyone expected. Today, that same energy is building again. Trump is back in the White House. Rate cuts are on the table. Governments are about to flood the economy with fresh money. It's the same kind of setup that helped launch the last major crypto boom, and expert analysts like Raoul Pal are saying this time, it could run even longer. There's one big difference though. This time around, Bitcoin isn't just riding on hype. Billions of dollars are pouring in through ETFs, something the 2017 market never had. Long-term holders are stacking coins. Supply on exchanges keeps dropping. More people are paying attention to crypto again. And not just retail traders, but big money too. As Raoul Pal said, this doesn't feel like a market getting ready to crash. It feels like one that's just getting warmed up. Now let's return to Raoul Pal for more interesting insights.
Has Amazon been in a super cycle? Yeah. Has Microsoft? Yeah. Has Google? Yeah. Have they all had massive correction periods during the downside of the 4-year cycle? Yes, every single time. So what you don't do is you don't get rid of the cyclicality. It's the compounding of returns over time. Now, the only change that I could say is possible, and I think is likely, is that the downside in Bitcoin is not as big as people expect. Right? The free money trade is you try and sell out somewhere near the top, or even if you don't sell out, you're waiting for the dip to buy more. The answer is usually wait till it's down 70%, 75%, start buying, and you make a 20, 30x on that trade every time. My guess is it probably ends up down 40 and not down 75. And that will create a lot of complications for people who are waiting for the big leg lower. And people are going to get caught out, I think, in this cycle. Now, that doesn't mean all of the long tail stuff doesn't go down 90%. Of course it will. But I'm thinking about Bitcoin itself as the anchor price to this whole thing. I kind of am the impression of what changes is the downside is reduced in Bitcoin. Crypto is this incredible, fast, super high velocity, creative destruction cycle. You don't know what's going to be really valuable until the bottom of the cycle. The things that survive become the best trades. Solana, Ethereum. So Ethereum in 2019, absolute killer trade. 2018, Solana in 2022, absolute killer. So what you need to see is when those things go down 95%, everything goes down 95%. So now you've got all of these things at a discount. Your job is to find out what really has network effects, what is really powering an ecosystem. And what you'll find is a bunch of these are kind of dead chains because they were just using money from the foundation to pay for economic activity. But then you looked at Solana and there was a ton of developers building. The community was like focused. Tolly was a good leader. You're like, okay, there's signal here. So I like the cyclicality where you wash out all the bad ideas. People are testing innovation. And that's good, right? A lot of innovation. You do VC, tons of VC things go to zero. But if you get the right ones, they don't. You can make a lot of money out of them. So that, I think, is the power law.
The failure rate in crypto is just so much higher than traditional VC. And I'm just hoping
there's more crypto projects.
Just the amount of volume. Yeah.
Also, don't forget, unlike VC, these are coming to market instantly. So if you were to look at really early stage seed investments, and if you were to have a real-time mark-to-market on those, they'd be horrific. Are we going to die today? Are we going to survive tomorrow? Are we going to die today? I mean, that's all it is. They're the same. It's the same thing. It just happens to be the earlier stage bit that's hidden, because in VC, there's no mark-to-market really, until a token launches or equity becomes tradable, i.e. different people want to pay for the equity.
In other news, Jeffrey Kendrick of Standard Chartered now expects Bitcoin to hit $120,000 this quarter and climb to $200,000 by the end of 2025. Rising bond yields, whale accumulation, and strong ETF inflows are pushing demand higher while investors move away from US assets. Bitcoin is becoming a major target for that shifting money. Momentum has been building for weeks. Bitcoin is up nearly 9% over the last 7 days, recently trading just under $95,000. Optimism is also rising as President Trump shows signs of easing trade tariffs, helping cool fears of a global slowdown. Last week alone, crypto funds pulled in over $3.4 billion, with Bitcoin grabbing most of it. With more capital flowing in and fresh interest from both retail and institutional players, Bitcoin's path toward new highs looks stronger than ever. Anyway guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.